Hey, everybody. Thanks for joining us again today. Our second episode of the show, Trading Rebellion. And it's with Trade the Chain and Market Rebellion. We have our senior analysts over there, Market Rebellion, CJ and Monty, coming to you live. And we got Nick Mancini, Director of Research and Chief Community Officer at Trade the Chain. Obviously, a big Monday. It was a big weekend. I mean, I feel like we need a weekend to this weekend. But a lot of stuff happening, and I'm sure if you're in the space actively like we are, it's been a lot of messaging on your phone, a lot of chat groups, and watching what's happening. So we got a lot to cover today in a short amount of time. We're gonna jump right in. I'm just gonna give an overview real quick to what's happening here in the markets as far as crypto is concerned. We can see total market cap has raised above that $1 trillion value to 1.07 trillion. And we're going to talk about why that is in just a moment. But Bitcoin shooting up 16.6% in the last 24 hours to 24,000, just over. And sentiment, 70 out of 100. If you followed us last week, that was in the bullish or the bearish to neutral territory. Ethereum up 12% to 1670, but still on a neutral. It looks like Bitcoin is really getting all the flight here from what we're seeing. And again, we're going to discuss more in a little bit. I'm not going to go over any other crypto because I don't think it really means anything at this point with all the chaos going on. But Nick, do you want to just head into the macro and kind of give us the overview of what's happening?
Yeah, so thank you for that primer, Alex. We're looking at the DXY now, which kind of encapsulates, I think, a lot of what we just saw, knowing that, a lot of in our shows will track the inverse relationship to the risk markets to the dollar. But, you gave a great primer as to what happened. And I think, to all the normal people out there who took a break this weekend and did not have to worry about anything, welcome back to the Thunderdome, if you will. So while we were, assessing everything that happened with markets, I wanted to put together kind of a to Z timeline of exactly what happened last week and led us to where we are today, and a little bit about, what we may see moving forward. So last week, I think the easiest way to start is, if Jerome Powell was speaking in front of both the Senate and the House of Representatives, all the Congress people had their opportunity to grandstand. Elizabeth Warren took it a little bit too far, in my opinion, and really started to attack Silvergate Bank in relation to its crypto relationships, as well as potential nefarious deeds and accusations that it was throwing at it. Now, what many people don't understand is that although Silvergate did have a large crypto network, it was a normal U.S. operating bank. It had, it was 100% legal. Everything was relatively fine, provided plenty of customers did not redeem their deposits, and it was functioning like any other normal bank. Now, of course, Silvergate got ran on and eventually failed due to the inability or a basic insolvency due to lack of customer deposits on hand. That spread over to Silicon Valley Bank and Signature Bank, both who bank in very similar sectors. Silicon Valley Bank is more VC edge tech, but obviously risky investments, loans to startups, near and dear, close to that crypto realm. So what Elizabeth Warren did was started a bank run on, let's call it the fringe banks, still large banks, but not the majors. And since that happened, multiple banks failed because they operate on a fractional reserve system, therefore don't have all of the capital on hand to manage the massive amounts of redemptions that happen. And I think Silvergate had a 25% redemptions in a 24-hour period, which is absolutely insane. We have not seen this since 2008 and decades before that. So moving forward, the Fed clearly had to step in, else everybody today would have ran on their own bank to protect their own assets and likely move it to the big three, big four banks, which would have hurt innovation, which would have hurt liquidity, which would have hurt more things than we have time for this call. So the Fed stepped in and basically created a credit facility to allow all failing banks customers to access their deposits, allow banks loans to manage issues with their balance sheet associated with redemptions and issues associated with a rising federal funds rate. Remember, a rising federal funds rate attacks other things on banks' balance sheets, makes it difficult for them to do business. Couple that with redemptions, this is the fire that we're dealing with. So the Fed stepped in to manage that. What it umbrella represents is a form of QE in which the Fed is introducing liquidity into the market to solve a liquidity crisis. Now, the issue is, of course, this should be good for crypto. It was invented in the last financial crisis in an environment very similar to what we are seeing right now, which equals higher crypto price action, which is what we're seeing. But the issue is equities are down bad. We've seen a lot of equities correlation. And of course, we have CPI tomorrow and FOMC at the end of the month. So while one crisis is averted and crypto certainly had some euphoria on the heels of very similar action in 2008, 2009, the real question remains what are the contagion effects? What's going to happen to equities? And once crypto, has this little euphoria explosion, what comes next as we head into CPI and FOMC? I don't have those answers, but I think a lot of the panelists on this show might. So excited to dig into that.
Nick,
well, sorry, go ahead.
I want to ask you something about the DXY, because typically we see the VIX as well as the DXY usually moving in the same direction. However, they're counter today. What do you make of that, discorrelation? I just feel like there's a ton of volatility, but what do you make of that, discorrelation?
No, it's something that I've been pondering all day because, equities open lower. We, of course, had a bit of a snapback prior to open, but we're still more or less, lower than we were when we finished the market on Friday, and DXY is lower. So, just from a basic risk standpoint, that's not really, equating to how we've been tracking the markets. And I think it's a very difficult question to ask. If I had to guess, it's definitely more in relation to how the market is reacting to banks' balance sheets. Considering the Fed opened up this credit facility, all of those, mark to market, or, I forget what the exact other term is for managing it. In kind or live price action. CJ, you might have a little bit more information on that nomenclature, but basically, considering the Fed stepped in, the balance sheet woes for the banks aren't nearly there as much, and therefore I don't think the dollar would spike up. Basically, nobody really needs the dollar right now because they're managing a bunch of other things right now, in my perspective. Therefore, the dollar's dumping and everybody's figuring out what the heck to do with their risk assets.
Well, we know what some people are doing with their risk assets, and that's going into Bitcoin. I mean, up a lot over the last 24 hours. Let's hear, Monty, give me your perspective on why that flight to Bitcoin is happening during this whole pandemic of sorts.
Yeah, that's a great question, Alex. And I think, Nick partially answered that during his analysis there. Bitcoin was born out of the wake of the last financial crisis, 2008. Banks were failing, and that is what led Satoshi to create Bitcoin. So not only is that narrative being bolstered, but also I saw something pretty encouraging this morning. If you could go ahead and throw up my chart.
Sure thing.
Here. When we deal with Bitcoin, one thing that I always tell members of our community, there's no easy money to be made. It's never going to be easy. And what we saw this morning was massively negative pre-market data in equities. And as a result, people got short Bitcoin. It's happened countless amount of times where we see pre-market data come in looking negative and traders will get short. Then, of course, you deal with these liquidation squeezes, and today they were significant. However, looking at the total amount of capital that was liquidated this morning, we're looking at about, between last night and this morning, we're looking at about 300 million. That's a lot, but it's not enough, in my opinion, to drive price from 20 to 24K. I believe that there has to be some spot buying going on. And, like you said, Alex, getting back to your original question, why would Bitcoin be going up in the wake of this financial crisis? Well, if there is a run on the bank, where are people going to put their money? Like Nick, pointed out, this is the whole purpose of Bitcoin. It was meant to, survive these sort of run on banks and provide a store of value when there is nowhere else to store value. And I think that's exactly what we're seeing here with Bitcoin today. Seeing a little bit of a rejection before we get to that 25K level, but nonetheless, this outperformance from the equity markets is very impressive. One thing I will say that definitely is contributing to this positive price action is this tweet from CZ of Binance last night. He says, given the changes in stablecoins and banks, Binance will convert the remaining 1 billion industry recovery initiative funds from BUSD to native crypto, including BTC, BNB, and ETH. So if I were to focus on any three cryptos right now, it would be those three because we have a clear $1 billion injection of capital coming into that. And in terms of actionable insights, I just want to
Well, quickly, Monty, on that topic, before you dig into the BNB chart, just to make the precedent for everybody who may not have remembered back when this happened, but the last time something like this happened was when Do Kwon and the Luna Foundation were deploying, I think, what, $500 million of.
Hopefully it ends a little bit better.
Yes, but I will say,
Steady, lads.
BNB is not Luna, but the same effect is that when Do Kwon and the Luna Foundation announced that, it took a couple weeks for it to take effect, but we started nearly a run that I think doubled most crypto prices in that time frame. Not saying it'll happen here; it's a completely different environment, but it does imply higher price action in the short term if that capital is deployed and used.
Monty, sorry, go ahead, CJ.
It's funny you mentioned that because Monty and I were talking about the exact same Do Kwon reference earlier today. And people forget, like, Bitcoin was up at what, like 45,000?
I think it was like 30, 40, yeah.
So considering we're below half of that market cap, yeah, that's it's not nothing. So
Monty, real quick, I'm going to return to your screen, but on your previous comment, on as far as price going up and spot buying, looking at this right here for stablecoin exchange net inflows, that green candle is over $1 billion in net inflows in that hour. This is a 24-hour chart. In that hour, over $1 billion went onto exchanges.
This easy effect.
Yeah. So, all right, back to you, Monty. Keep going, tearing it up.
For sure. So, like I said, these are the three I'd be focusing, particularly BNB, right? Looking at this from a daily perspective, I think Asia bids this thing up. We're breaking above the 20-period moving average, looking really strong. CZ effect, I think, could plausibly carry this thing back up into the 350 level. So that's one that's on my radar. But one thing that I did want to just briefly talk about is BITO, because a lot of people, it's popping big today, of course, up 20%. That's natural, given what we're seeing from Bitcoin. But I think that there's going to come a point where your regular everyday stock investor that just, trades the S&P is going to want to get exposure to Bitcoin. And they won't necessarily do it in the same way that us native crypto folk do, like, just going through, KuCoin and buying levered perps or even just spot buying. I think a lot of them will be more comfortable because of what's happened with FTX, because of what's happened with Voyager, everything else, getting a publicly traded company, and BITO offers that. And in terms of what they hold, they really are the closest thing to a Bitcoin ETF you'll find. They do hold T-bills, but they also hold CME Bitcoin non-equity index. So, this is a good way to get exposure to Bitcoin if you're not comfortable, trading perpetual futures or, buying spot on any of these exchanges, which is a justifiable standpoint given everything that's happened in the last 6 months. And if you compare BITO with the other major ETFs, all of these are more so focused on like the mining space. If you look at the holdings of Van Eck, of Invesco, of Bitwise, all of these will include things like Riot, will include things like Hive, Hut 8, Marathon. That's not the exposure I'm looking for necessarily. I'm looking for, more straight up Bitcoin exposure. And if you're looking for that in a legitimately traded vehicle, BITO in my mind is the way to go. So keep an eye on this one as we continue to, like I said, climb higher. One thing that's worth noting here in BITO is that, we're breaking above the 20-period smooth moving average. You can see how bad this thing's been getting beaten up. And one thing that people have been pointing out is this gap right here, this massive gap that would take us all the way up to $18. A lot of people will say, some technicians over at Market Rebellion will say that 80% of gaps fill. If that were the case, then we're looking at around $18 BITO. And that could happen sooner than I think a lot of people think. So don't underestimate BITO. I think it's a great way to get exposure to Bitcoin. I currently am long that with expirations of March 31st, but will be willing to roll it if, price kind of stagnates around 25K. So that's all I got. And I will pass it back to you, Alex.
It's a good idea. I love gap trades. Those are some of my favorite. I mean, we talked about GRT to the downside last week,
Right.
which damn near filled all the way. After over the weekend. So, if you find a good gap, of course, I will say, longing resistance is one of the tougher. It takes a little metal. But if once you see that break, it's more likely than not. So.
I like to say 80% of gaps fill. It's just not the ones you want. There's always gaps above or below price. So
right.
But I do.
What's the famous meme? Like it always stops like right at my entry, and it always I always close right before the pump or whatever. So,
question for you guys: did any of you trade USDC as? And another thing, CZ and KuCoin having that's a beautiful idea. Having leverage traders bet and basically repeg the currency just off of futures trading. I thought that was pretty awesome. Did any of you guys participate in that trade?
I did not trade on leverage, but I did buy a good bit of USDC at 93 cents. So I'm happy with that trade.
I'm usually just trying to convert my USDC.
So you have a little. You sound like you're like far away, Alex. There you go. Right. You're back.
I'm back. Okay. Yeah, I mean, I was stuck trying to convert USDC this past weekend.
We're losing you again.
Yeah, it keeps like it starts loud and then it fades away.
Just like.
All right, here we go. I'm going straight computer audio. It's probably going to stink. I apologize. Hey, anyway, two things. Let me tell you real quickly, because, during this weekend, I was doing a lot of stuff on Twitter Spaces and all that, and didn't capture the full upside of that Bitcoin pump. And meme coins were outperforming BTC for the most part. So I went to two ETFs. I degened into KRE and IAT this morning, thinking that the fear, uncertainty, and doubt was at its max peak. And those are ETFs on regional banks, and I'm going long, baby.
Can we get the chart, KRE?
Nick, can you pull up the chart for KRE?
Which asset?
KRE.
I got it.
KRE has a pretty heavyweight position in one of the largest laggers from this morning, which was pull it up. I've been following so many bank tickers.
If you're going to get long from a technical perspective, not a bad idea. You're at the same level as the December 30 or the end of the low of 2018 and the high of 2016. Or yeah. Or no, I guess not the high of 2016, but 2015
we had Lucas in the live chat talking about he was looking at some possible bank buys this morning. Of course, it'd be a long-term place, but Lucas, I know, is a very bright guy. So if he's looking to buy those, I think they're worth a look. But I'd be curious to hear what else everyone else in the chat is trading or looking at, or their thoughts on the bank stocks as well. If you guys got any comments, drop them in the live chat for sure, because
hey,
information there.
Speaking of interesting picks, Monty, and what everybody's trading, let's head over to CJ. I think he has something out of the ordinary he wants to discuss.
Speaking of banks, do you know if it's possible to buy some of Banco Popular in Puerto Rico? I'm just joking. All right, let's go to some charts and some contrarian trading in general. First, I want to go to the bond market and talk about rates and the interesting price action we've seen there. Something that we talked about last episode regarding bond futures. was basically just the concept that this was a very crowded trade. If I could find the full chart, here we go. You'll be able to see that everybody was short this thing from, many months ago. And we talked about using that COT data, commitments of traders reports, to look for crowded trades and, contrarian trade them. Now, with a stop at below that low, it never got stopped out and it was able to rip. And this is basically a direct response to the crisis that we've obviously been facing the past couple of days. It's a reflection that the market kind of thinks that the Fed will have to either ease rates or just have a softer monetary policy in general. But also, I think it's just an indication of a very strong short squeeze and the danger of a very crowded trade. We were talking about the fact everybody was getting paid to wait. Everybody was long fixed income. And all it took was, a day or two to give back all of the gains from the past virtually 3 months. So those are the types of trades that I really like to look for. And luckily, this one worked out because there was a very strong catalyst. But knowing where those shorts are positioned and taking the other side of the trade, I think, is a pretty good way to tilt the risk and reward in your favor. I don't think it changes the odds of something happening, but I think it changes the payout and the risk reward. So that's what I like. Talked about orange juice crisis. Nothing much to report, basically at the same levels. But let's see, soybeans coming down a little bit as well. That's another contrarian trade where you've got a ton of longs. But then I think what you guys will find, one of the more interesting ones, let's go to the weekly chart here. So this is from Zero Hedge last week, and so far they've top ticked it. So we'll see. But I am short livestock, soybeans, orange juice, and then long the 10-year treasury notes and remain. So I think this may have been the low of the year and thus inversely the high of the year in 10-year treasuries. So very interesting macro trades. And, you didn't have to be staring at the bond market necessarily or staring at fundamentals to be able to catch that trade. All that you kind of needed was to understand where the vast majority of market participants were, and then just define your risk and do the opposite and let the trade play out. So
speaking of that, I want to dive into Bitcoin and ETH just to go ahead and cover that for our audience. Something that I'm noticing on, Alex, if you want to share my chart, is, and you can ignore some of these support and resistance lines because they're not really valuable on the daily, but my favorite trigger, which is the RSI trend break. Typically, it is mostly valuable when it is a multi-month or multi-week trend. The RSI trend was broken today. Well, I guess technically it was broken yesterday, and it's on its way to confirmation today. We also have a very similar formation on ETH. It's actually a little bit more perfect from January 16th all the way to, pretty much yesterday. So nearly a 2-month trend on both of these breaking up. So typically what you'll see is, sometimes you'll see just a spike straight through, and we certainly have some of the momentum to do it. But what I would usually expect is a drop back down, very similar to any break of resistance, is eventually a resistance retest as supports and then move higher. So if that were to be the case and we end up getting rejected off of the recent highs for Bitcoin and Ethereum, which seems somewhat likely unless we have a fantastic, couple of 4-hour closes heading into the end of the day, I would expect us to likely, head back to where, top of range resistance is. So we're now back in the higher end of the range for Bitcoin. So I would expect maybe a tap around 23.4, 23.5. And for ETH, the goal would be for it to hold around 1650. If both of them, maybe as low as, 1600. But if both of those can hold those levels, that RSI, trend, which is a very, very solid indicator, is looking pretty good. So I just wanted to cover that for kind of a long-term time frame perspective. It could mean that we see a short drop off in the next 24 to 48 hours, potentially in line with some volatility around CPI. which is tomorrow at 8:30 a.m. Eastern. But this, last time I posted trend breaks like this, it was the S&P 500 when it formed a month break like that. And the S&P 500 shot up from 39.30 all the way up to 40.50 on that break. So I'll go ahead and just draw that line for you guys. This was the break. So last time S&P did, had a multi-month break on the 4-hour, which is, longer term time frame. It zoomed, 5-10%. So, with a confirmed or 4%. So with a confirmed break on Bitcoin like that, I would expect us to probably head to the top of the RSI channel, which is about 70 or potentially higher, provided momentum catches. So I just wanted to cover that because that's it's generally a highly successful indicator in my experience.
Guys, one thing I did want to show real quick is take a look at this. What we're looking at right now, $111.9 billion in trading volume in the markets over the last 24 hours. That is twice the average over the last 3 months on a daily basis. Huge. And then if you click over to Bitcoin specifically, you're going to see something else that's been a big outlier for today. And here we can see the what the sentiment chart looks like for the last week and that huge rise at the end. But look at this, $55 billion in trading volume over the last 24 hours in Bitcoin. That is the usual total trading volume of the crypto markets, 119% up versus average. We don't see that in Bitcoin. That hasn't been seen in such a long time. So it was really exciting, to be honest with you, to have those numbers around. I felt like it was back in the up-only days.
It's honestly pretty crazy. And CJ's got the up-only cup and BitMEX shirt. Like you are the crypto meme to a T right now, bro.
He's OG. He's like when I wear my Bear Stearns hat, you can now wear the BitMEX shirt, and that's like from yesteryear.
He just needs an Arthur Fathead on his wall right behind him, and it would be perfect.
Yahtzee. Okay.
Oh my God! All right, folks. CJ? What do you think? What's that, CJ?
Nick hit on this point earlier, and I wanted to talk to you guys and ask you about it because this is a very actionable thing. I'm sure there are a lot of folks who might be sidelined or sitting in positions, not really worried, they're wondering what to do. What do you guys think is going to happen with CPI tomorrow, and what are your plans positioning-wise going into it?
Cleveland Fed predicted 1% drop for CPI, so 6.4% to 5.4%. The general market consensus expectation is 6% for CPI. And for core, previous was 5.6%, and the expectation is 5.5% for general market expectations. So if CPI comes in at 6 or lower, good. I think, continued momentum. If core CPI comes in 5.5 or lower, continued momentum. I think the market will probably focus on core more than regular CPI. But if both come in at expected or below expected, I would be shocked if this momentum didn't continue across all risk markets. But the nuance is, what if it comes in 6.3 CPI, was above expected but below last month? We'll probably just see a bunch of volatility around current price action before heading a little bit lower, I would expect.
Before heading lower, you said?
Yeah, I think if CPI comes in, let's say like 6.2, 6.3, which is higher than expected but lower than previous month, I would expect to probably see just immediate Darth Maul candle across equities and crypto. And then I would expect probably easing a little bit lower as the market is like, okay, 25 basis points seems very likely. Because if it's not lower than expected, I think 25 basis points will be everybody's vision. But if it's 6 or lower, then I think more people will start to think of a 0-point basis hike.
I think it's going to be 0 basis points at this point in juncture. So I'm running with that. I just want to say, Justin, Silicon Valley Bank is being sued by its shareholders for fraud as of this afternoon. So that's an interesting take because I was actually going to ask what your all thoughts were for this week. Like, what is it going to look like? Are we going to bounce back? Did we feel max pain with the FUD this morning when, by the way, we all anticipated what was going to happen this morning. And I think there was over 10 regional bank stocks that were halted very close to the open. But does this get better by Friday, or are we still in turbulent waters?
To me, I think we're still in pretty turbulent waters here. Just a bit worried with what I'm seeing from the Qs. Today we did, obviously open down, bounce back a little bit, but we're still below these critical moving averages. If I just share my screen real quick. One thing that, I always like to look out for is that's not my screen.
Sorry, that was Nick reviewing our newsletter for the day.
Hey, there was some valuable info in there.
Looking forward to reading that later. But what concerns me with the Qs is, there have been instances where we've broken down below the 20-period smooth moving average, which is what this purple line is, but not so much with this much velocity. And if you look back, throughout this entire downtrend, each time we've either come up and retested this level as resistance, or we've broken down below this level after an extended period of positive price action, it tends to be pretty ugly. And that's what I'm worried about here, is that we've had this nice extended period of positive price action, that kind of contrarian trade. Everyone was super bearish coming into 2021, stacked up in the puts, and then, that basically allowed us to go all the way up to 310. Now that the puts are kind of have capitulated a little bit, there's mass fear in these markets. I think that, we could see some sustained negative price action in the Qs for the rest of the week. But of course, we got some big catalysts coming up like CPI and like the Fed. So, and I'm in complete agreement with Nick, anything below 6%, then, could be good. I think anything above 6%, we might see the Qs in for a little bit of a rough ride tomorrow. That's just my opinion, however.
I mean, do you think the number even matters, really? It's like...
No, it's more about...
Here, let me show you put call ratio real quick.
While you're pulling that up, just to answer that question quickly, I mean, the one thing that I keep going back to, and I mentioned this last week, is, the Fed keeps saying they're data dependent. So I'm going to listen to that. And if the data supports their jobs being easier down the road, then I'm going to listen to that. That's kind of my perspective right now.
Yeah, let me be more specific. Long term, CPI has different ramifications than the day it actually comes out in terms of monetary policy and the Fed being data driven. So I agree with you there. What I would say is that I think there's still a great deal of puts in the market, justified by this equity put call ratio. Each time we get massive spikes like this, it's occurred with local bottoms, because this has been a very good sentiment indicator, because when everybody gets scared, they just rush to buy puts and you get these massive spikes. And the last time we've got these levels, it has been at local bottoms. I'm sure, this could be the time where we break and the Qs go to zero and everything dumps. But based on these previous instances of where we've reached like extreme panic and fear, that's not what the market has done, and the majority has been wrong. It's interesting. We do this cocktail hour Fridays at Market Rebellion, and usually they'll put up a poll saying, what do you expect for price action for the next week? And, it's about 500 to 700 folks survey in. And the last time, so the two previous local lows have occurred when that sentiment poll has been over 70% bearish. So when everyone gets bearish and expects lower prices, it's basically meant they've already shorted or they've already gotten flat. And like, there's a reason why 95% of people lose money over time, is because the masses are often wrong. And if you want to be the best and succeed the most in this game, you have to fade the masses. I'm getting a little off on a tangent here. Let's bring it back to CPI.
Well, that's why I'm not wrapping up the show, CJ. So I'm just letting you go. I want to wait till you're absolutely finished.
So
My question,
Think about-
CJ, is do we long when the Economist puts banking crisis on the headline, kind of in talking about what you said last week?
there's an interesting statistic about that. When you look at Economist head cover or like headlines, and you go a year out, 70% of the time the price is either up or low, depending on what their prediction was. When price was like 16 or 15K, this was right after the FTX collapse, they published The Death of Crypto. That was the title of the article. And I didn't feel great. It's not like the collapse of FTX improved the fundamentals of Bitcoin. They didn't. But just because of that headline alone, I'm like, I should probably buy some. And they did it with like the death of oil too. They've done it. And in the early 80s, they said this is the death of equities. And then we had the greatest bull market in like the history of the United States. So you have to do the opposite. You have to fade the masses. Now, when that comes to CPI, if everybody's already short or flat going into this and we get a really hot number, then the first initial reaction, in my opinion, would probably be really large sell-off. Then all the puts are going to cover. Think about what happened last time we had a hot number. It's not like that was bullish for the market, but price closed higher. So I think that tells you this market trying to tell you something.
All right. Guys, thank you. By the way, CJ, you brought up the happy hour. You guys have been doing happy hour at Market Rebellion. It was instituted during the pandemic when people couldn't go out to bars. So everybody over there started getting together virtually. How do people get in on that happy hour?
You can go to marketrebellion.com, and there should be a link in the top header to access to the cocktail hour. And so, yeah, if you go to marketrebellion.com, you should be able to find it. Of course, our site's there, marketrebellion.com/try crypto for Monty and I's community is also there. So I'll shill that real quick. But yeah, pass it back to you guys.
All right, sounds good. Be on the lookout. I just saw it hit my email. It was Nick's Monday morning deep dive commentary to the markets. It goes out every week at tradethechain.com. And thank you guys all for joining us on Trading Rebellion today. It's our second episode. We'll be back Thursday, 1 p.m. Eastern time. Hopefully the world doesn't fall apart by then, because we really actually love to cover the news and the markets as they're happening. So, if something critical happens tomorrow, maybe we'll hop on if we can wrangle up some of the crew. But until then, we hope it stays steady until Thursday, so we can join you back. And
hey, remember the markets are up since our first show. Markets are up. So
markets are up. Well, it's unbelievable how the markets define themselves during times like this. So we'll leave it at that. And thank you all very much, folks. We'll check you out on Thursday.